It is, what does that say? Monday, July 23rd, 2018. This is your daily Forex trading strategy session. Let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. If you are new to these seminars, please show your loyalty and respect by visiting TradersWay.com and opening up at least a demo account. This is an opportunity for it to fall in love. Faber, I also draw my Fibonacci studies upside down. That's a sign of me being self-taught. But my way is better, of course. So anyways, please visit TradersWay, become part of the TradersWay family as soon as possible so you can throw your diamonds in the sky. The whole self-taught thing on the fibs, I don't know if you guys noticed this. Let's just do this blank, I guess. No, let's do scan. All right. Typically, someone, I believe, draws their fib this way. So I got this all. But you know what? I've been doing it this way forever. I can't even explain why it's done the other way. I never understood it. So again, I was self-taught and I was just looking at fibs. But one of the things I realized is when you do it this way, so I'm going to try to explain it. See, they're upside down. So the 0.382, I changed it to describe it as a 618, right? So this 618 right here is actually the 382, and the 0.618 is actually described on here as the 382. And the 786, it's actually a 21.4. Long story short, these are actually upside down. So early on, like 1,000 years ago, when I was trying to figure out Fibonacci, I'm like, well, these are the extensions. Why would I want the extensions below if I'm pointing them up? So anyway, so I'm weird this way. So I flipped them upside down. Okay. I flipped them upside down. So if I'm looking at a retracement, I want them to point me in the right direction. So I don't know. So anyways, that's how I do it. I didn't explain it very well, but that's how I do it and why I do it. That was so long ago. It's literally 20 years ago. Yes, Faber. So I created something long ago called Fibbits, which is a combination of Fibonacci and pivots. Okay. And if anyone's taking, I think it's in the swing trade course, I think it's in the basic or the basic training course, I think it's in one of the other courses. Anyways, it's a standard operating procedure to trade retracements. They're called Asian fades, right? So to trade the Asian fade, let's get off of this. Let's go to something. Okay, this is not a great example, but okay, one of the things that you do, and again, this ain't gonna work. It's not a good example. Let's see if I can find a better example. I guess we'll go with this gold. Put this in a smaller time. Maybe it'll be helpful to flip this over to daily pivots too. So I'm going to do this. Oh, daily pivots with fibs. 19, okay. 19, 19, 20, 20. Okay. So it doesn't have the indicator anymore, but let's go with this, okay? So one of the things that I've done for 100 million years, I don't do it as mechanically as I used to do it before, but it's just psychologically more than anything. I look at the previous day's low. I look at the high, okay? And typically what I'm looking for is a retracement. So I look at the, you know what, let's put daily pivots on there. Sorry. I don't know if you can tell by my voice and stuff, I'm actually quite sick. I didn't sleep very much, so I'm a little off today. I apologize for that. All right, so let's go with this. This makes it easier to see. So one of the things I look for is a high and a low, like a pivot, right? And then I look for a retracement. Typically, this is during the Asian session. So if the previous day had been up, 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 then in the new trading day, right? In the new trading day, I tend to look for Asia to fade back against the previous day's direction. So if the previous day was up, I kind of look around the Asian for a fade, and then I buy the dip. And to help with this process, and none of these are really that good examples, I guess it's just because it's summer, but one of the things I do, I created this in 2003, maybe. What I did is I created a combination of pivots and fibs. So I looked at this and I thought, well, I'm not actually looking for pivot support in this case. What I'm looking for is Fibonacci support. Okay. What I found is very often I'm not buying the pivot, I'm buying the Fibonacci retracement. Okay. So a fibot helps me identify sweet spot of the 382 to 618 Fibonacci retracement. Okay, so if we've broken high on the previous day, then I'm looking to buy somewhere in this gray zone. Okay, so I fib the Asian session and buy the dip. Essentially, it's not always that clean, but yes, essentially, right? So I look for the up, 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 down, down, and I buy. So I created an indicator, like I said, in 2003. I had it programmed for using Dealbook 360. I don't think even Dealbook 360 was out. I think it was Dealbook 2, and I don't think these work anymore. I think they work here though. Let's do. Where's my weekly pivots? And I think on this one, because Wyatt programmed it, Wyatt used to be a student of mine. So on here, he has something called pivots somewhere. Yeah, pivots. All right, so he's got pivots on here. And again, that's something that I've invented. So where is it? Let's see. Did it go on? Let's try this again. Pivot. Oh, dot. Pivot. Plot. Labels. Plot pivots. There we go. True. All right. So again, I don't use his indicator display anymore. Okay. So he's got a Fibit 1, Fibit 2, and Fibit 3 right here. So of course you could tinker with it and make it so it's easier to see, but he's plotted that in there automatically, and all it's doing is helping you buy this dip. Okay, it doesn't tell you which way. So for example, you would have to decide ahead of time that buying is what you need to do. Obviously, this is a buy, not a sell. Well, a Fibit is a pivot and a Fibonacci retracement. Okay, Faber? Oh, I have to turn on both? Yeah, so it's just, I do it naturally now, so I don't have a need, but it's, it is something I've been doing for forever. Button, where's my pivot labels? Yeah, it makes it a little better. I don't know. Okay. Anyways, I hope that makes sense. I know I did a lousy job of explaining it, but it's just a standard part of I don't know, trading. Helps you trend trade. Okay. You could argue that this is going the other way, and you could have this set up, and it might be able to fit you the other way. Oh, I know what I'm doing wrong here. Sorry. Go ahead. I know what I'm doing wrong here. There we go. That'll be better. There you go. Okay. So that's what's going on there. I'm just taking Fibonacci of the previous day's low, and I'm moving it up to the high, and buying at the 382, which is right there. Yeah, it's a role reversal. So like all these things, everything we do comes down to very, very simple things. And whatever you call them is sort of irrelevant. So I'll give you an example. Trading a double top versus trading a head and shoulders versus trading a crown versus trading a lower high. Okay, these are all reversal patterns. To me, they're all the same thing. And if you're day trading, selling here, we're selling here, we're selling here, we're selling here, right? Because this pattern to me is the same as this pattern over here. I mean, they're all the same. This is the same as this. So we can say, oh, so this is a cluster of a Fibit and a pivot, or oh, it's just simply a role reversal, or oh, Wayne, it's just a breakout pattern, or yeah, I mean, there's probably 6 or 7 different ways to describe it, but it's obviously a buy, right? unless you're a bear. So let's clear this out. If you're a bear, you're just staying away from the noise, and instead you're getting ready to sell in here, and maybe that's why it's topped out. So a bear is clearly going to sell, right? A bear is going to clearly sell in here, and a bull is going to clearly buy in here, right? So no matter how you describe it, right, the rules of engagement should still be the same, right? And once again, for the 1 millionth time, where people go wrong is they don't know if they're a bull or a bear. And they're looking to these charts to tell them, what should I do, Wayne? Or what should I do, chart? What should I do on gold now that it's done this? Should I do this? I'm like, yeah, that might work. And if that's what you wanted to do, if you wanted to buy, this would be a great place to buy it. But I don't know any more than you do if it's going to fall or not. But I can tell you if it's going to fall, this is probably a good place to sell. So if you saw something like this, or something like this, or something like this, it's all the same, right? You're simply looking for reversal patterns at resistance. So the difference between a consistently profitable trader, and that doesn't mean every trade is profitable, it just means your winners are bigger than your losers, and you probably have more winners than losers. So you're consistently profitable because you know ahead of time that you're a bull or that you were a bear, right? And those who are not consistently profitable don't know if they're a bull or a bear, and they're changing directions all the time. And that leads to inconsistency, which means you just cannot. If you're trading consistently, how could you possibly be consistently profitable, right? Faber says, but you need larger stop loss. Larger than what? $10 pips? Then yes. Guys, I apologize that my voice is off and that my brain is a little slow. I haven't slept very much in the last month, actually. But I hope you appreciate that I didn't quit on you and call in sick and like, oh, I was up all night. I don't have a voice. So, anyways, thank you for your patience with me. Yeah, that's true. I guess so. Yeah. Maybe we should just burn through some of these, right? Oh, my pleasure, Faber. I think the interesting thing is, think of, young Wayne McDonell back in 2002 thinking about this, analyzing hundreds and hundreds of charts, hundreds of days of trading, and trying to figure out patterns. What am I doing right? What am I doing wrong? Why does it behave this way? Is it the time of year? Is it the pair? Is it the market? Is it the news? Is it the business cycle? Like, what's going on here, right? I mean, I put a lot of thought into these things that seem like just common sense now. But remember, there was nobody trading this market. I didn't know any other currency traders. When I posted videos on YouTube about Forex, there was a time when I was the first 6 pages of videos. There was no other Forex video on YouTube. I had to figure all this out. There were no books. I've told this story. Amazon was just a tiny little startup, and the only book they had about Forex was Forex Made Easy. So I had to go to universities trying to find books on the foreign exchange, and I had to buy like economic textbooks to read about the foreign exchange market. Like, there was nothing when I started. So, that's how I came up with Fibbits. because I found that if yesterday was quite bearish, today was probably going to be quite bearish too, that we'd probably make a lower low. Because I realized at some point a trend was lower, right? Lower low, lower high, lower low, lower high, right? And these tended to be a day, and then it would fade over Asia, and then London would bring it down, and then it would fade over Asia, then London would bring it down, right? So I went through, I observed maybe thousands of these things, and I said, well, it tends to fade during Asia, so we'll call it an Asia fade. And then I looked at them, and it was, I think even 4 pivot points I was doing this. So I looked at it and I said, you know what? This little sweet spot in here tended to be somewhere between the 382 and 618 Fibonacci retracement. So I should look at the London area to maybe sell this. Okay? Right? But it's easy, right? See how easy that is? That might have taken me a year. I am not joking. So something I'm like, yeah, you should do this. You should do this. And you're like, oh, yeah, that's easy. I'll do that. That took me a year. Here, there it is, my gift to you. Run with it. Amazing. Thousands, well, maybe not thousands, hundreds of hours of work that I can just give to you in a minute. But here's the thing. Maybe it's the hundreds of hours of study, not trading. I'm not talking about trading now. I'm talking about studying the market, studying the chart, studying my behavior in these different market conditions, and seriously thinking and pondering about all of it. You know, what does it all mean, Basil? Maybe that is the key, right? So, are you a bull or a bear on this one? I told you Thursday, it's Monday. I told you Thursday when we were down here, then what? You should take profit here, right? Do you remember talking about that? It's just what you're supposed to do. There's pivots and everything in here, weekly and monthly. So I'm just like, look, I know it's fallen for a month. I understand. I get it. Or should I say week, right? It fell all week. Great. Take your profit. Be done. Be happy with it. Don't worry about it. And then what? Then if I want to remain a bear, it's probably going to fade back somewhere to here. I'm guessing this is on Thursday, right? This is before Friday. And that maybe somewhere around here, if I was a bear, I'd look to sell again. So now that we've had finished Thursday and then Friday, right? So what, 30 hours of trading? 30 hours of trading. We got our new weekly pivots. And what do these pivots mean? It means if you're a bear, somewhere in here is where you want to sell. But I already knew that on Thursday. Right? I just don't know if it's going to fall. But kind of look at this, like this was obvious on Thursday. And up here is still the sell zone, right? So here's my plan for the week. Are you ready for it? Wait for it. I would sell here and I would sell up here. Sure, Barry. Sure. Right? And that's all I have for the week. There you go. I just planned out the pound dollar for you. The funny thing is, even though it's Monday, We did do this on Thursday, so it's already done. We knew this last week, but that was the trade plan. Yeah, Faber, well, that's part of it, right? So let's see how many ways we can skin this rabbit, okay? This is a weekly pivot point. That's a sell, so that's one. This is a monthly pivot point, so that's a sell, two. Oops. This is this part of the sweet spot that we just talked about in the Fibonacci retracement, but not on a daily basis, on a weekly basis. So that's three. Okay. We can call this a role reversal. To me, it's all the same, right? Four, right? Anything else? Oh, 55. That predicts the double bottom. But yeah, I can give you that. Would you buy it here? So that's good, though. Doesn't that give you quite a bit of clarity? If you were going to buy it, I'd have a plan like this. Well, you know what? Let's just reset this. Let's just clean this up. So much for that. All right, well, it's not as clean as I wanted. So let's go to like a 4 hour. All right. So I woke up, I was born in the world a bull. I'm a perma bull. Okay. So I'm looking for previous levels of support. Let's zoom in again. Okay. So I recognized last week that this was a key area. This was the weekly target for bears. Okay. This is an old roll reversal. There's a monthly pivot. And then, of course, the primary S2, which we discussed last Thursday, where you're supposed to take profit. Right? You see what I mean? So that makes me a bull. Where do I buy if I'm a bull? Starting, let's say, on Thursday or Friday or today. If I was a bull, what would my plan be? Good thing I didn't say, what would my plan A be? Because that would be confusing. Wait for a double bottom. All right. That sounds like you're going to let a lot of fish go. Buy an M2, double bottom, buy M2. Okay, all of those are okay. The first opportunity is looking for a reversal pattern on like a 5-minute chart at the weekly S2. Because it's a weekly S2, but because it's also this support and this support, and there's a lot going on. So you're thinking, because of the confluence of role reversal going back a year, because it's a monthly pivot, and because it's an S2 of a weekly cluster, all those things say, well, this actually could be support. So on a 5-minute chart at the weekly S2, which is here, you would look for a pattern. Can I give you an example of a pattern? This is a 4-hour chart. Imagine it was a 1-hour chart. Just imagine it. Just add four times as many candles. Buying off that pivot was one opportunity. Okay. A big part of this opportunity is bears taking profit. Are they supposed to be taking profit Friday afternoon? Or are they supposed to be adding to their short positions Friday afternoon? Adding or reducing? Yeah, taking profit. So that's somewhat predictable, right? Are you thinking this way yet? I mean, it makes sense now, but are you thinking this way Friday afternoon? See, I call this stop hunting. Friday afternoons, in particular in the summer, and in particular when it's a beautiful afternoon in London. Yeah, I'm not joking. So on Fridays, check the weather in London. If it's beautiful, a beautiful Friday afternoon in London, the trader's going to want to leave early and go to the pub and drink and be obnoxious to women. Okay? This it's part of being, well, I don't know if they're English, but English, British, whatever. Okay? So they're not going to add. They're going to get out of their previous trades, book the profit, models and bottles, except it's not models and bottles. It's Guinness, cold Guinness. What kind of person drinks cold Guinness? Right? Probably Barry. Cold Guinness? It's not supposed to be cold. Anyways, it's something that the British do. I'm like, savage. Yeah, all right. Thank you, Barry. Boom. Barry is a true gentleman. So anyways, I call that stop hunting because if you write down in here, you're giving permission. You're giving permission to the London boys just to take the profit and take the rest of the day off, because they're going to they're looking for it. They're like, oh, should I leave early or should I stay? What should I do? And all of a sudden it starts going up and they're like, oh, forget it. Boom. They take their profit, off to the bar they go. Sorry, the pub. Off to the pub they go. Now, it sounds funny, but I've been telling the story for like 10 years. So it's true. In my mind, it's true. But in particular, nice, beautiful days in the summer. Now, if it's raining in London, they're going to stay. Well, there. Well, thank you. I love being right. So that is one thing you could do. So did you write that down? Friday afternoons, right? In the summer, stop hunt. Now, Friday afternoon, in my world, is Friday morning, 6 o'clock in the morning, right? And you notice I'm looking at a Great British Pound? Okay? Write all this down. And don't believe me, test it. Does it work for you? Do you think it's true? Is it something that you can trade? Is this knowledge important? Okay? Write it down, test, and reflect. Not because I said it works, but because the more important thing I said today is I spent hundreds of hours of studying the markets, the charts, my own behavior in the market and on the charts. So put some time in. Is it true? Is it not true? Why? Write a paper about it. You know how many papers I write? I just wrote a 10-page paper and I have to write another one. I sound like the cat in a hat. Okay. How do we trade? You buy. Look, let's make sure everyone's on the clue train here. The entire Great British Pound market was short all of last week. How do I know? We talked about it last week because this is the exact price they would sell. So you know the whole entire market's short at precisely the price they're supposed to short. So if they got in at precisely the price, where should they take profit? Well, how about precisely the right price? This is so textbook that this was probably algorithms. It's perfect. You guys see that? If you don't know it, like I'm trying to tell you, that's perfect. You're like, I don't get it. What does he mean that's perfect? Then you are lacking knowledge. So you should figure this out. Because there are other people in the room with us that are like, yeah, that's totally perfect. If you're looking around, you're like, dude, what's he talking about? Why is everyone nodding their heads, right? Then you've just discovered the most important thing. You now know what you don't know. Okay? That is the most valuable thing I could offer you. To suddenly say, here's something you don't know, now go find out about it, because it's probably important to you, right? So anyways, so if you know the whole market's short and you're trying to hunt their stops, you're buying against their short position and you're freaking them out because they're sweating bullets. They're like, should I take profit? Should I take profit? Should I take profit? And this pops for 8 hours straight, it goes up. And then Friday morning, it still ain't falling. What do you think they're thinking about? It's lunchtime in London and it's still not falling. It's been 16 hours. What are you freaking out about? You're freaking out about that it's going to go against you. So what do? You take profit, therefore it goes against you. Why did it go against you? Because you took profit. How do you take profit on a short position? You click a button and says take profit, but your broker enters a long position to offset your short position, so you're actually a buyer. I sound like shit today. Sorry, guys. Sorry. You just got me fired up. All right, so that's one. Okay, and then, yes, if you were a bull, you could do, let me clear this. You could do this. You could do this. You could do this. The last one is not ideal, but is potentially what's going to happen because of that. So you could really say, all right, if it does this, I'm not going to like it, but I'm still going to look for the opportunity. I don't want this one, so I want this one. So I have two plans now. If I was a bull and I were to marry, right, I would take this one. That would be plan A for the week. Plan B, if I were a bull, would be this, but I wouldn't be happy with it. It's not what I'm looking for, but if it happened, I would trade it. And that's it. I am done planning for the week. For a bull and a bear. I know exactly what I'm going to do. And everything else, I don't give two hoots about. What would I rather be? What am I, your financial advisor? Manage your money for you? Yeah, very. It's for you to decide. You remember City Slickers? There's just one thing. And then the guy says, well, what's the one thing? He's like, that's for you to figure out. I know. Just kidding, Barry. How does summer doldrums affect your strategy? Well, this time of year, it's acceptable to focus on smaller time frames, not expecting breakouts. It's okay to make 25 and 50 pips at a time. Okay, it's okay. Now, if you just simply accept that and not also try to make good trades, then you're hurting yourself. So maybe you could, cut your lot size in half, but every time you pull the trigger, you pull the trigger twice. Assuming you're trend trading, so I wouldn't do it on counter trading, but like here, you could have made two trades, two half trades. One, you take profit at the support, and the second one you let run for the right. So you have a day trade and a swing trade. That's probably the better way of doing it, right? So every time you pull the trigger, there's two half trades. One is a day trade, one is a swing trade or a weekly trade. Because you still got to get paid, guys. The world's not getting any cheaper, unless you live in America, and the problem is everything's cheap. That's a funny thing, right? In America, like, we don't have any inflation. Everything's cheap. No. The reason I say smaller trade is because you're making two trades, so it should still be the same trade. I'm not saying in the summer cut your lot size in half. No. I'm saying if you're going to buy this dip because it looks good on a daily basis and it also looks good on a weekly basis, then take both trades, make 30 pips on the first one, and still try to make 100 pips on the other one. Just don't expect 100 pips, even if you normally would, because of the summer doldrums. Okay. Now, in a few weeks, when I restart the swing trading group, it's actually not a swing trade. There'll be swing trade setups, but hopefully I'll have an opportunity if the markets allow me. It comes down to the markets. I will actually teach you how to portfolio trade, which is a whole different thing. But you need to know how to swing trade to be able to set up a portfolio. So, yeah. Yeah, Faber, don't adjust the amount of risk. Okay, just don't expect as much reward. Okay, $1, sure, I'm happy to do that for you. Okay, has anything happened? No. Any other questions? Sorta. But looking at this 4-hour chart, is this your golden opportunity you've been waiting for? This is it, right, Barry? You're like, oh my God, look how awesome this is. Look where we are. Amazing. Before I would dive into this looking for opportunities, I would go look at other currency pairs to see if you have better opportunities. Okay. But if you just have to trade the euro dollar, then yeah, you're at resistance. But again, I did this a week ago, right? So you don't need me to kind of reiterate that was resistance. But you have to remember, I did this days ago. When we were down here, I said up here is where you would sell. Well, that was very, 12 hours ago, right? Do you do it now? Yeah, I don't know if it's going to work. You should have sold it up here, right? So like, I don't know if I can even fit this in there. Let's try it. Yeah, sort of in here is their short position. Okay, you have this move here, which is a little aggressive, but this one's very obvious. Okay, that's just like straight up. Um, Straight up, just straight up. So maybe this role reversal is the next one. Okay, but you've already given up two moves. So yeah, possible head and shoulders. Are you talking about euro dollar? Oh, I know what you're talking about. On the no, yeah. No, but yeah, we discussed that again a week ago. I think the first day I got back from Harvard, we talked about this. Okay, and for that to happen, needed to go up first. That probably won't happen until August. Okay, but that's why I have this blue channel up. We were trying to see and trying to determine if the market wanted to start that move now. By now, I mean like Thursday or Friday. And it doesn't seem like it did, right? So we can get rid of this now. So this just looks like a giant puddle of mediocrity. Why not sell it? Let's take a look. Well, that's basically what I was saying earlier. That already occurred. I mean, right? I mean, it's all the same thing, guys. So let's just now put on weekly here, template weekly. That's already been established. Again, I'm sure I talked about this 3 days ago, right? When the market opened 15 hours ago, yeah, you should have taken that shot, right? And then if you missed that, then at the London Open, you had the opportunity, right? So you had a second opportunity to sell there. I mean, yeah. It's not that it's late to short now. It's that you're late, right? So you're accepting risk. You're supposed to be short up here. Nobody said you should be short down here, because now you're getting pretty close to buying this in here, or sorry, selling. You're getting pretty close to selling down in here, and that is a death trap. So you can sell up here, but right? But if it's your first entry, you just need to know that you're mediocre. You're supposed to be short up here, which means you were on top of it when the market opened on Sunday or Monday, or you were right hot to go HOTTOGO at London Open. But if you're just getting in it now, like you're very, very late. Yeah. Okay. So it's not too late. You just have to realize that there are people that are beating you. Yeah. So Robert's already got both, right? And like, yeah. So Robert's beaten, maybe not pip wise, but game wise, right? On the long run, you don't want the vast majority of your trades to be on the third move, right? Nor do you really want them to be on the first move. So I'd say the best trade was doing this London Open or doing this on Friday. Because bear in mind, in the last few minutes of trading on Friday, you would have known where the new M3 was, and somebody sold it at exactly M3. Because on Friday, in the last minutes of trading, you can look at the high, low, and close of the week and calculate where the pivot is, right? So anyways, so it's all plausible, okay? It's all plausible. And well, I guess, you know what? Let's leave it at that, since I'm running out of energy and I'm running out of voice. Yeah, well, the swap's not amazing, John, but it doesn't hurt either, right? So anyways, I'll see you guys tomorrow. Peace on earth. May the pips be with you. May your profits be above average. Namaste. I wish you happiness and joy in your life. And there's nothing like happiness and joy that comes from trading successfully, having pips rain out of the sky, right? Magnums of champagne, you're just like, and throwing your middle finger up to the man. You're like, take that, take your job and shove it. I'm a currency trader, right? Wow, okay, that's superficial. All right, it's in here. I hope that you fall in love with Forex and that you love being a currency trader, and that what I share with you every day motivates you to to be great. So peace on earth. May the pips be with you. May your profits be above average. See you tomorrow, guys.